All right, good morning, everyone. I'd like to call the Sandusky City Commission Finance Committee to order, and we'll start with roll call.
Okay. Mr. Thomas-Woola?
Here.
Mr. Monter?
Here.
Mr. Ramey?
Here.
Mr. Allen?
Here.
Mr. Stahl?
Here.
Mr. Orszag?
Here.
And myself, Michelle Reeder, are present.
Thank you, Michelle. Approval of December 6th minutes, which were sent out in advance of the meeting.
Motion to approve.
I'll second.
Second, Steve. Any further discussion, comment? All in favor?
Aye.
Any opposed? All right, we'll move on to new business, and we have a presentation today from Sestina and Associates on our debt summary.
Yep.
Turn over to Michelle for that.
Good. Morning, everybody. Thanks for having us in again this year. We appreciate it. Why didn't you do this?
Even he's having trouble. I don't know what he's doing.
It's getting full screen. That's what he was. Good. All right, thanks. Again, good morning. Appreciate the opportunity to be here again this year. We have updated the debt. Is. All right, good. We've updated our debt summary and capacity analysis for the city, which we do every year and have been for quite some time now. Tried to streamline it this year a little less detail in this document. Michelle has all the backup detail if anybody's interested in the detailed debt service schedules and the disclosure documents from the past, but we tried to streamline it for today's presentation just to hit the high points. The first thing we always start with is the summary of the outstanding debt. It is a different picture than this time last year, as represented by the mess out front here. The Columbus Ave project was just a pipe dream at the time, it seemed, but now it's included in the debt picture, and it's still in the form of notes, but we will decide later this year whether we keep it in notes or include it in a longer-term financing later this year. The two biggest parts of the pie here are the Justice Center and the Rec Center. The Rec Center obviously hasn't been issued yet, so this is a pro forma as if the Rec Center debt was issued. All plans are to issue that debt to the tune of about $11 million this year. So since all intention is to do that this year, we thought this is our opportunity to be in front of you folks, so we thought we'd include it to have that picture going forward. So on balance, you know, the two primary portions of this pie are the Justice Center and the Rec Center. Justice Center's strictly general obligation debt, definitely goes against all the city's debt limitations and whatnot. We have the Rec Center included in here as if it were general obligation debt, which it probably will be in order to get the best interest rates on that piece of debt. However, we expect legislation, since we have the Cedar Point funds set up to pay the debt service on it, it really isn't an obligation borne by the general fund. But for debt limitation purposes, to be conservative, we're including in that set of numbers right now. Took a little different view of, for your sake, of the repayment schedules, and you see that, you know, even though we took on a lot of debt with the Justice Center and planned Rec Center, the debt does fall off over time, and there is a number of these smaller issues that are retired in the next 5 years. So by 2030, the overall debt service drops by about $800,000 and continues downward. Now, what this does, this look, I think, is helpful to help us plan. It's like if the general fund is comfortable at this level of debt, as time goes on, if we kept this level of debt, we could produce other monies for other projects. And that's the capacity part of this, that the cash flow is one thing, the willingness to make those commitments is another one, and then having the projects to be financed, obviously, the third leg in that process. But this gives you an idea that indeed the debt service is manageable, and it does decrease over time as it currently stands. The one thing that's missing from this is the planned landings project. And as Michelle told us, that we got one bid on that, and it was over, 110% of the expectation, so they had to be rebid. You guys want to talk about that?
Yeah, so we had the landing project bid out and open bids last week. The project was over the engineer's estimate, so our Aaron Klein, our Public Works Director, is going to take a dive into that and see about cost savings and why. We had a significant amount of interest. There was 4 other general contractors that attended the pre-bid meeting that was mandatory, and they were here during the opening bid, but they didn't submit bids. So there's some strong interest in the project. Aaron's going to take a deep dive into it and see about why, and he's had some good conversations, so we think we're going to get there. We'll end up rebidding it at some point this year. I'm not sure exactly what the timeline is yet, but it'll get rebid as soon as we can figure that out. And it's a great project, and we have a budget for it, and it's close to what the bid was, but like I said, the engineer's estimate was over, so we'll take a look and get that bid back out.
John, if I may, what was the original estimate?
That was about 18.4 million, and the bid was 21.8, so it was over 10%. As far as the numbers are concerned, we have $15 million that we can pledge to the project. We have other funds through grants and that through the state, and that are covering the other part. So we were looking around a $20 million project, for that. And we have funds for the inspection. So 20 million on the project, absent the inspections, is kind of where we're trying to hit. So we're kind of close, but we'll take another look at it.
And we have in the past, I don't have it in here today, but we've presented in the past the repayment sources for the different pieces of debt. And the landings is primarily borne by other revenue sources, TIF funds and other expected revenues, not general fund money. Similar to the rec center coming from the Cedar Point grant. So next, we always like to review the city's credit card limits, if you will, with the debt limitations. The first is the direct debt limit, which is based on assessed valuation. On an unvoted basis, the city has up to 5.5% of assessed valuation available in the way of a debt limitation, 10.5% with the vote of the people. This number obviously went up this year thanks to the revaluation of countywide property valuations. And at this point, with the revenue bonds that don't get counted against the debt limitation, we currently have $10.5 million, but this includes, again, the rec center as part of the general obligation debt of the city. Chances are, since we don't have legislation on that, we didn't include it as an exemption in these numbers. But once we get legislation, we know for sure that we're going to pledge the Cedar Point funds to that repayment. That would buoy the available limitation on a direct debt basis, another $11 million. So it's important to understand that a lot of the city's debt is exempt from this particular limitation. This is the most restrictive limitation. On the next page, the indirect debt limitation takes into consideration all of the overlapping subdivisions that share the city's indirect 10 mil limit. Again, because it's a 10 mil limit based on assessed valuation, this also got buoyed by the revaluation. Yet having the city's debt, as we have it currently structured, taken up a little less than 5 mils of that limitation, there's still 4 mils left, and that's assuming a 1 mil reserve, which we've talked about before, for emergencies. So if it were the full 5 mils, this debt limitation would be as much as 45 million. Taking 1 mil into reserve is 38 million. And this is based on that millage extrapolated into a debt service payment, an annual debt service payment at 4.25% over 20 years. So that's how we come up with these numbers. But even at 38 million, again, the previous page at 10 plus million is the more restrictive debt limitation, so that's the one we have to abide by. And then, again, behind all these limitation numbers is the assessed valuation. See the big jump here with the reval for this year. Been lots in the paper about that. Schools are getting a lot of heat, not to mention everybody in this room, but it's the law as we live by, and it is what it is. So nice jump. It'll look good next time we talk to Moody's. They like to see the tax base increasing. So from our perspective, it's a really good thing. And then we finish up with just a couple of current market indicators. This first chart is of a 20-year bond maturity over time. As you can see, we had that nice dip in 20 and 21 in interest rates, long-term interest rates, and basically we're kind of back to normal. If you look at the blue line across, that's pretty much where things have been since since the recession in 2008. So yeah, it feels like interest rates are high now, but they're really not when you compare it to historical averages. They have increased since the election some, and we're just waiting to see, policies come out of Washington, what they actually are and how that's going to impact interest rates going forward. And the final interest rate graph is the what we call the yield curve, which shows the time value of money where short-term interest rates are lower than high-term interest rates. And the thing that's most interesting about this graph right now is that it's normalized, okay? For the last 24 months, really, we had a what we called an inverted yield curve where certain short-term interest rates were actually higher than long-term interest rates. But that has corrected itself, and we're back to a normal upward sloping yield curve. And again, the heavy blue line, second one down, is current interest rates. So they have come down a little bit over the last month, but they change every day. So again, the biggest driver with interest rates right now is inflation and policies coming out of the Capitol. So it's just kind of a wait and see, and we'll keep Michelle apprised of any major changes in that regard. So, like I said, we tried to streamline things a little bit this year. I'll have the details behind everything if anybody needs it, but that's what we had to provide today. Any questions?
Hi, Mike. I have a question.
Yep.
Been some talk about, cutting costs, raising additional revenues in terms of eliminating the interest or the tax-free nature of municipal and state bonds. How far advanced is that? As you can see it, I realize you're not, in the scrum, but how far advanced is that? And I assume that would only be prospective and not retroactive. but-
Correct, yeah, that's our understanding, is if it would be any new debt issued, if that would occur, would be issued as taxable debt because the tax exemption wouldn't be available. All previous debt that was tax exempt would remain tax exempt until it matures. Saw an article yesterday about how they actually think those of you that hold those tax exempt bonds now might get a little buoy, in the value of those bonds because they won't be available anymore if it happens. We were through this before in the previous Trump administration. I actually was in the scrum on Capitol Hill with the Government Finance Officers Association trying to talk to legislators about what a bad idea that was. In that time frame, we did lose one advantage that tax exempt bonds had, which was to advance refund former tax exempt bonds once before their call date. They did do away with that, so we're missing that leg in our, or that arrow in our quiver, and we're making do with it. But yeah, if we lose tax exemption, the need for capital expenditures in political subdivisions will not go away. It's just going to cost more to do them.
What's the rough impact as you?
It's about a 30% increase in cost, in debt service costs.
Thank you.
Right. Yep. Great question. Thank you.
Anybody have anything else for Mike? All right, Mike, appreciate the presentation. Thank you.
Thank you. Thanks for having us. Appreciate it. Oh, and one last thing. I did bring the brains behind this. Catherine Pence is our research analyst. She's part of the Balcony clan here in town, and I just thought it was time to get her out in the open.
Welcome. All right, thank you. Next, we have the 2024 financials. I'll turn that over to Michelle. And 2025, just roll right through it.
Good morning, everybody. Happy Valentine's Day. Thanks for joining us. No place you'd rather be, right?
Grim start.
It's true love.
True love, finances. All right, so we're going to look at what we did in 2024. So this is just a highlight of 2024. Make this a little bit bigger. All right, looking at the revenue, historically, this goes back to 2019. You'll see in blue is the income tax revenue. In 2019, we were about $11.3 million in revenue. Obviously, the dip happened during COVID. When you look at 2024, we hit a new record of $14.1 million, almost $14.2 million. I will note that there is about a $600,000 refund request hanging out there that is pending from last year. RETA, the Regional Income Tax Agency, is working through that, getting the documentation that's needed. So that might not be a true year-end number once we get a final refund count for 2024. In orange, you're going to see the lodging tax figures. $1.4 million was the figure in 2019. Going to 2024, we saw an increase. We're about $2.1 million in lodging tax for the year. Gray line is your admissions tax. Obviously, there was the increase from 4% to 8% that happened starting with 2022. You'll see that we've been just over $9 million since that rate increase happened. Last year, we ended at $9.6 million in admissions tax funds. Looking at the total revenue, if you go to 2024, $35.7 million is what we saw in revenue. I just like to remind everybody that there was a $900,000 transfer that was repaid to the general fund in 2024. That's shown as revenue. So if you take that away, we actually had true revenue of about a $34.8 million last year. So about a $300,000 increase over 2023 numbers. Looking at the expenditures for the general fund, the blue line at the top is going to be your administrative support. Again, that includes the transfers that are going from the general fund typically to the capital fund. There are transfers that go to other funds such as the police pension and the fire pension, but most of it goes to handle capital projects. That number in 2024 was just under $16 million. You can see in 2023, we were $17.8 million. Just to note, one of the large reasons for the transfers increased in 2023 and 2024 is the city manager and I have been in talks about this building, City Hall. We don't own this building. We have the opportunity, we thought it was in 2026, but it actually might happen in 2025. We have the opportunity to buy this building. So we have put away the $3 million that it would be required to purchase the building. So that transfer came and was done in 2023 and 2024. On the chart here, you can see it looks orange here, but it's red usually. The fire department and the police department, they're running real similar, real parallel. Those figures are for both those departments. Yellow line is the municipal court on the bottom there. And then the gray line that's just it also runs parallel with the municipal court is our horticulture and public realm divisions. This shows the expenditures broken out by categories going back 2019 to 2024. That yellow line that kind of sees a steep increase in 2022. That's, again, the transfers that were promised because of things that were promised during the Cedar Point partnership deal with the emissions tax and parking tax going to 8%. The other blue line at the top is our wages and fringe benefits. So you can see in 2019, we were about $13.2 million in wages and fringe benefits. At the end of 2024, we were $15.3 million total for wages and fringe benefits for all of our employees. That is a little bit less than where we were, a little bit more than where we were in 2023. We were at $13.8 million. As a reminder, we had ARPA dollars starting in 2022 and 2023 and 2024 that we were using for personnel. So over those years, there was about almost $2.5 million that we used for personnel that came from ARPA dollars, the stimulus dollars, and not out of the general fund. So going forward, you're going to see that for the budget in 2025, we had that factored in there, and everyone's accounted for. We didn't change any employee counts because we knew that was coming, one-time money, and it was planned that it was going away in 2025. The orange line on there is our contractual services, and supplies and materials are on there also. And I'd like to note, supplies and materials, as we all know, cost of everything's gone up, and those numbers have gone up slightly, but not too bad. Inflation's under control and doing a good job with the funds that we have available to spend. Here's the total general fund expenditures going back to 2019. Last year, $34.8 million, again, slightly above where we were in 2023 at $34.3 million. This is the total expenditures, includes all the transfers for the year. This slide is your cash balance. So the green line is the cash balance, and the gray line there shows the target balance. So 15 to 20%, I know this committee always likes to see 20%, so that gray line represents where we would be if we hit the 20%. You can see there's been times that we were above that, but we're still slightly under that 20% mark right now, but we're in a good position. As Mike Cecina tells you, that helps with our debt rating, so we like to see that. The 20% is a good number to be at as far as having cash balance for the unknown expenditures that could come along the way. And the last slide here shows you the total employee count at the end of the year in 2024. We were at 248 full-time employees as of the end of December. If you compare that to where we were in 2023, we had 245 employees. So not a large increase. Employment's been pretty stable. We're still trying to fill some positions in the police department mainly. Fire department, they may have a person leave, but we're backfilling that as quickly as we can. They might differ, employee count by a month by the time we backfill somebody. But we're really getting to the point where we're pretty good as far as staffing. Like I said, police department's the only one that really has some vacancies. They have four right now. So that's the only department that we're really looking to hire at the moment. That's all I have for 2024. I'm happy to answer any questions on the year-end financials that anybody may have.
Without sharing anything confidential, can you tell us anything about the nature of the requested refund? That's a very large amount.
There
The answer is
was.
no, the answer is no.
It was a business merger of some extent, and they're saying that the accounting team made an error, paid them money to Sandusky, and it shouldn't be at Sandusky, it should be at another location.
And what rights do we have to audit that?
Full rights to audit, and that's what Rita's working through, getting all the correct documentation before anything is issued back to them.
Okay, thank you.
Any other questions for 2024? Hearing none, we'll proceed to 2025.
Moving right along. So 2025, we only have a month of history here, so not too much to go over. I was thinking it might be easier to kind of, well, I don't know, do you guys prefer the charts or just the numbers?
The charts.
Pictures it is, okay.
Yep. Somebody's asked it.
Somebody's got it.
All right, so same things that we just looked at, obviously just a month of history here. Blue line on the revenue for the general fund is where we are for income tax, $1.48 million right now in income tax revenue. Gray at the bottom is the admissions tax, and then orange, it's hard to see because it's very nominal for January, would show the lodging tax, but the number for January is $3,718 in lodging tax that we've collected. The lodging tax, just for your knowledge, primarily is collected through the county. So the county collects it for us, and we get it quarterly. So everybody that for the last quarter of 2024 remits it to the county in January, so we'll see our first large lodging tax receipts in February. Here's total revenue for January. We're sitting just over $2 million, slightly above where we were in 2024. Expenditures by departments. Blue line at the top again is going to be administrative support, includes the transfers. In January of every year, we do the transfers that are required by ordinance. Those are for the marketing program and the public art program, so those are done every January. In January of this year, we also funded for the Housing Beautification Grant Program that's now available, so that funding was done in January, so those funds are available for that program that's ongoing right now. When you look at this chart, you can see the next blue and orange line here are the police and fire departments. Again, real similar in numbers. The police are $482,000 for the month of January, and the fire department's at $387,105 for the month. The bottom two lines are the horticulture and public realm divisions and municipal court again. Expenses by category just shows it a little bit different way. Blue line at the top is our wages and fringe benefits. Again, we're real similar to where we were in 2024 at this time, so January 2024 compared to January of 2025, right on as far as the wages and fringe benefits. As a reminder, we do have 3 unions. We have a contract settled with the police department at this time. The other 2 unions, there's not a finalized contract. So you did approve for the administrative employees. They received a 3% wage increase in 2025, but we still need to settle with 2 other unions. So when those are settled, we'll see a difference in the numbers for wages and fringe benefits for 2025. Yellow line is the transfers that were done in January. Orange line is contractual services, and the bottom is supplies and materials. Looking at the expenditure side, 2025, $2.6 million in expenditures were expended out of the general fund. Cash balance at the end of January, just under $6 million, 5.981. So again, based off of the expenditures that are budgeted for 2025, 15 to 20% would make a cash balance of $4.8 to $6.4 million. So we're right on target of where we want to be for the month of January. Nothing alarming for the month of January. I think it was 6% of the revenue was collected for the month, and then I think we had 8% of the budgeted expenditures expended for the month of January. Last slide here shows the full-time employees listed by department. So 248 employees at the end of January, and this just shows what departments, police and fire, are going to have the largest counts for employees. And that's what I had for January financials. If anybody has any questions, happy to answer anything.
Just timing of the audit, is that being scheduled yet?
So the auditors are coming in. They're coming in 2 weeks, or the first time they're scheduled on site. But they're already working. We have, I love the new way that they do it. We have a file share. They put the request in there, and we can just fill it, and it dumps it in by line. And we have a little progress bar across the top, shows everything that's completed. Everything has due dates. It's really nice. So they are working on the audit. They'll be on site here in 2 weeks, and then the hope is our next meeting is June 13th. We're hoping we can have an exit conference at that time with the auditors. So we hope to be moving right along and get that completed in a timely fashion for the year. The other thing I want to note, just for you guys, we are working on the 5-year capital plan. We were hoping to have something to you guys today. It's still in draft form. There's a couple things the Public Works Department's working out. Aaron Klein really heads up that 5-year capital plan, does a great job with it. So as soon as we have a final draft, we'll get it to you guys so you can have eyes on that also.
Any other questions, comments for Michelle? All right, thank you, Michelle.
Thank you, guys.
Anything else from anybody to bring before the committee before we go to public participation? All right, hearing none, we'll open it up for any public participation. All right.
If I may.
Yeah.
Sharon's not here. So Sharon, I wish you well. I'm afraid maybe you're not well. Your questions are important. To anyone watching this, I encourage you to come to these meetings, ask questions. Democracy dies in darkness without people asking questions and without people feeling as though their questions are being answered. So I'm sorry you're not here. I wish you happy Valentine's Day and wish you well.
Thank you. All right, if there's nothing else to come before the committee, as Michelle noted, our next meeting is June 13th, and keep your eyes open for that 5-year capital plan. And if we need to call something special for that, obviously just let us know.
Perfect. I appreciate it.
All right, I will entertain a motion to adjourn.
So moved. Second.
All in favor?
Aye.
All right, thank you, everyone.
Thank you, guys.